This is Nightly Business Report with Sue Herrera and Bill Griffin.
Just do it. But investors might think Nike just blew it by featuring a controversial athlete in its new ad campaign. Here come the bulls. Wall Street's first outlook for 2019 is here, and it just might please investors. Picking up speed, auto dealers are busy, especially if they're selling large SUVs and trucks. Those stories and more tonight on Nightly Business Report for Tuesday, September 4th. Good evening, everyone, and welcome. Bill Griffith is off tonight. Stocks fell on the first day of September trading. We'll have more on that in a minute. But we begin tonight with one of the biggest drags on the market today, Nike. The shares came under pressure after the sports apparel company signed a multi-year deal with former NFL quarterback Colin Kaepernick and make his face the face of Nike's 30th anniversary ad campaign. And what makes this unusual is the controversy surrounding Kaepernick, who took a knee during the national anthem before NFL games in 2016, and Nike's longstanding business relationship with the National Football League. Shares of Nike were off more than 3% in trading today. Sarah Eisen has more.
Consumer companies usually try hard to stay out of politics and controversy, but Nike just firmly planted itself at the center of the culture wars. Just days before the launch of football season, Nike included Colin Kaepernick in its 30th anniversary campaign of Just Do It, his face appearing on some West Coast billboards and across social media. Sources say Nike doesn't plan on having Colin Kaepernick's signature shoes, as some are reporting, but you very well could see clothing product extensions of this ad. The backlash was fierce. Boycott Nike hashtag was trending all across social media, and the stock took a hit. But will it really impact Nike's business? Speaking to folks inside the company, I can tell you that the refresh of this Just Do It campaign is aimed squarely at millennials. Nike's trying to communicate what they think is an inspirational message to a younger generation. That's why it features other fighters across sports like Lacey Baker, a skateboarder who has broken through gender barriers, Shaquem Griffin, a linebacker who is also an amputee. But clearly, including Kaepernick became the only story everyone was talking about. Here are some business facts behind Nike's calculation. 2/3 of Nike's wearers are under the age of 34 years old. 45% of its consumers are under 25 years old. And there's proof that Colin Kaepernick and his message are marketable. Last May, the NFL controversy was flaring, and despite the fact that Kaepernick wasn't on a team, his jersey was in the top 20 sales of players, according to NFL.com, ahead of Cam Newton and Adrian Peterson. But no doubt, in a polarized country, there is a risk here that Nike is taking. Kaepernick is the face of the protests of the national anthem that President Trump has railed against. Kaepernick is also embroiled in a lawsuit against the NFL owners for collusion to keep him out of the league. No comment from NFL on Nike's move, but the company did just sign a long-term deal with the NFL to outfit the NFL players on the field through 2028. So it could complicate that relationship and make it a bit more awkward. For Nightly Business Report, I'm Sarah Eisen in New York.
And the president is now weighing in. In an interview with the conservative Daily Caller, the president said Nike was sending, quote, a terrible message, but he also said that the deal is what this country is all about. So what happens when a company like Nike starts wading into politics? Could the move have a long-lasting negative impact on the brand or not? Here to explore that is Dean Crutchfield. He's the brand and crisis management expert with his own firm, Dean Crutchfield Associates. Welcome back, Dean. Always nice to see you.
Great to be here.
So weigh in on this. What do you make of Nike's move?
Well, Nike's move has just earned it over $50 million of free advertising today. So that's a question, is it smart marketing or a dumb decision? To me, this isn't about getting involved in politics. This is getting involved in a politically sensitive issue. They're not saying they're Democrat, they're not saying they're Republican, but they believe Kaepernick is a major face to celebrate their Just Do It campaign. So is this a positive for Nike? I actually believe it is.
longer term, but short term, expect some waves, which we're
well,
seeing
short
today.
term, yes, exactly. I mean, even if you look, the millennials is the market they want, of course. They don't want a 60-year-old going to buy a pair of sneakers. They want a 16-year-old going to buy a pair of sneakers. That's clearly it. But also, when you look at some recent research, 38% of millennials were against the kneeling at the NFL. So it's still a very sensitive issue, even with millennials. But here's the thing. The younger generation tend to be more open-minded, a bit more flexible. And so therefore, I think Nike knows that its message can resonate across a broad spectrum of the millennial appetite for this type of marketing.
So how do they handle the pushback? Do they say nothing? Do they come out and, double down on the campaign?
Well, they double down. I mean, basically, you have to communicate why you're doing this, and what's the strategy behind it, what's your intent behind it, and why you're so confident that it's something that sits well with your brand. I think brands are all about brand purpose, and Nike clearly is saying we have a brand purpose, and these types of individuals exemplify what makes Nike great. So I think at the end of the day, there is some downside. There are going to be people cutting up socks and burning shoes. But what we're going to see over the next few days and maybe even the next few weeks as it rolls out is a huge groundswell of support for the campaign and the reason why Nike's done that campaign. But this is the test market, right? We're in Q4. Christmas is coming. Right. We'll know by people voting with their feet.
It isn't the first time that Nike has taken a risk. When Tiger Woods was mired in controversy, yes. Obviously not political controversy, personal controversy. They backed him.
Yes. Well, that's Nike's style. It's very much about, its brand message. And I don't want to go on about brand, but for Nike, it is such a powerful, awesome brand that we all love and know. So to me, this is about brand building. It's about staying relevant in the market. It's about staying valid in the market. And this is something that's very relevant and it's very valid for Nike in terms of its standing in the marketplace.
So I would have to imagine that they, researched this, did some critical research on what the impact might be, probably expected a stock market reaction. So what do you say to those who say they should ditch the campaign and apologize?
Well, I think that there's no apology needed here. It's a politically sensitive issue. Even Trump himself has actually backed that up, that this is our country, we have freedom of speech, and that's really what this is about as well. So I think that Nike's onto something here. They're onto something that's really powerful as a platform. It's going to continue going forward. There's obviously lots of other players they're bringing into the mix. So it's a very robust campaign that's got a lot of legs, as we can see, and there's going to be a lot of playtime.
Dean, as always, thank you so much.
Thank you.
Dean Crutchfield with Dean Crutchfield Associates. Well, Amazon made history today, becoming the second publicly traded U.S. company to ever be valued at $1 trillion. Its shares hit that valuation in late morning trading before pulling back a bit. It took the online retailer just 165 trading days to grow from $600 billion in January to $1 trillion today. As we reported, Apple was the first company to hit that milestone last month. Amazon shares closed up 1%. And the rise in shares of Amazon, though, was not enough to lift the broader market. Stocks started September with small losses as investors returned to work from the long weekend, concerned about trade between the U.S. and its key partners. We'll have more on that in just a moment. Today, the Dow Jones Industrial Average fell 12 points to 25,952. The Nasdaq was down 18, and the S&P 500 declined 4. A little bit later in the program, we'll talk to one prominent market watcher who's looking past the next few months and says next year will be a good one for investors. Oil prices saw some modest gains in today's session as a storm churns through the Gulf of Mexico. The tropical storm forced offshore oil producers to cut production, and there is some concerns that refineries could be impacted. The National Hurricane Center said the storm will likely be upgraded to a hurricane by the time the eye reached landfall near the Louisiana-Mississippi border. Domestic crude settled just under $70 a barrel. On the eve of the U.S. and Canada resuming trade talks, Canadian Prime Minister Justin Trudeau said that he always knew that the discussions would be long and involved, but he also said, quote, no NAFTA is better than a bad NAFTA. Elon Mui takes a look at some of the sticking points between the U.S. and its key trading partner.
The president canceled a Labor Day outing, instead staying at the White House to make phone calls on trade and other international issues. Meanwhile, Canadian Prime Minister Justin Trudeau had calls with labor leaders over the weekend. One of the big sticking points in the talks, protections that Canada provides to its dairy farmers. The U.S. wants more access to that market. But Canada says the U.S. already heavily subsidizes its own agricultural sector. Today, the Trump administration launched what it's calling a trade mitigation package, $12 billion in aid for farmers, particularly those hurt by China's soybean tariffs. Other thorny issues include the process for settling disputes between countries and whether this agreement should have an end date. The administration has just 30 days to produce the text of an agreement to Congress, and the president doesn't appear to be budging from his hard line with Canada. He tweeted over the holiday weekend that there's no political necessity to keeping Canada in NAFTA.
These deadlines tend to be artificial, but at the same time with President Trump, he really appears to be willing to do anything and everything, including, massive retaliatory tariffs on its allies. I think negotiators have to be mindful of the power of the clock and get things done while they have the opportunity to do so.
Several influential Republicans have warned that Canada must be a part of any deal, and it's Congress that gets the final vote on an agreement. For Nightly Business Report, I'm Milan Mui in Washington.
Construction spending rose slightly in July, led by an increase in home building and the publicly funded building of schools and highways. Economists watch construction spending closely because growth helps support the expansion of the broader economy, creating jobs both directly and indirectly. Meantime, manufacturing activity unexpectedly hit its highest level in more than 14 years. According to the Institute of Supply Management, sales of factory-made products, output, and employment all increased last month. But manufacturers have expressed concerns about cost pressures due to rising wages and the impact of tariffs. The auto industry heads into the fall, coming off another strong month of sales, as auto showrooms remain busy to close out the summer. Phil LeBeau has the details.
Okay, so this is more or less.
It's long been known in the auto business, sales rise and fall with consumer confidence. And right now, the American consumer is brimming with confidence, which can be seen in stores, a surge in new houses being built, and at dealerships, where business remains robust. While August sales from each automaker were mixed when compared to the same month a year ago, the industry is still on pace to post a fourth straight year of sales, topping 17 million vehicles in the U.S., which has never happened before. The good news for automakers, demand for trucks and SUVs, their most profitable models, is not slowing down, and inventories are relatively lean. Yes, the average monthly payment for a new vehicle continues to climb. On average, it's now about $525 a month. But with the hot jobs market in the U.S., Americans are fairly comfortable with the price they need to pay to climb into a new model. Phil LeBeau, Nightly Business Report, Chicago.
It is time to take a look at some of today's upgrades and downgrades. Verizon was downgraded to equal weight from overweight at Barclays. The analyst says the stock's high valuation will cap its potential upside. The price target is $50. The stock was also downgraded to neutral by MoffettNathanson, and shares fell 2% to $53.19. Facebook was downgraded to neutral from buy over at MoffettNathanson as well. The analyst cites the deceleration in growth and continued regulatory scrutiny. The price target is $175. The stock dropped more than 2.5% to $171.16. UPS was upgraded to strong buy from Market Perform at Raymond James. The analyst cites the outlook for its domestic business and its free cash flow. The price target is $150. The shares rose 1% to $124.34. And Nordstrom was added to Goldman Sachs' conviction buy list. The analyst says headwinds facing that company will fade, resulting in growth and returns. The price target is $73. The stock rose more than 3% to finish at $65.02. Still ahead, double-digit returns. Wall Street makes its first call on 2019, and investors just might like it. Business groups are urging the Senate to block President Trump's Labor Board nominee, calling him bad for American business and their employees. The president last week renominated a Democrat with close ties to labor unions. The National Labor Relations Board referees union management disputes. Well, the tech CEOs will be heading to Capitol Hill tomorrow to address online election meddling ahead of the midterm elections and to respond to criticism about how social media companies police their content. In testimony released today, Twitter's CEO Jack Dorsey defended his company, saying Twitter, quote, does not use political ideology to make any decisions, end quote. Facebook's Sheryl Sandberg is scheduled to testify and will touch on issues that she has discussed before, like security, the shutting down of fake accounts, and the elimination of incentives for fake news. And Google is expected to say that it believes it has a responsibility to prevent the misuse of its platform. JD.com CEO was arrested in the U.S. just a few days ago. He was later released and is now back in Beijing. But given the executive's control of the company and the looming uncertainty, investors sent the stock down nearly 6% in trading today. Eunice Yoon has the details.
The Chinese internet is obsessing over the founder of JD.com. Last Friday, founder Richard Liu was arrested in Minnesota on charges of sexual misconduct. He was released the next day and has since returned to China, though Minnesota police say that the investigation is still active. JD says that the accusation is unsubstantiated, and the company issued a statement saying he has been released without any charges and without requirement for bail. Mr. Liu has returned to work in China. Today, Chinese social media was circulating photos of Liu at an event at JD's headquarters here in Beijing. Liu shows up at HQ as currently the #1 search phrase, and that could help ease concerns, at least momentarily, of the company's investors. Liu is the founder and CEO of the Nasdaq-listed company. He started JD in 1998 with only a couple $1,000s, moved it online a few years later, and managed to turn it into a retailing giant and the main competitor to Jack Ma's Alibaba. Liu has celebrity status here and dominates the company's decisions, so whatever happens to him has a big influence on JD's future. For Nightly Business Report, I'm Eunice Yoon in Beijing.
And late this afternoon, the Minneapolis Police Department released some specifics, saying Mr. Liu was arrested on suspicion of rape. The advertising giant WPP warns of squeezed margins, and that's where we begin tonight's market focus. WPP's North American business was a source of pain as major clients spent less on traditional advertising, causing a key measure of revenue to fall. The company said it was unhappy with the quarter, and as a result, it plans to launch a strategic review and invest in restructuring the business. WPP said that strategy, though, comes with the price of weaker 2018 margins. Shares of WPP fell nearly 8% to 76.22. Shares of Dunkin' Brands moved higher on speculation the coffee chain is ripe for a takeover. Research firm Gordon Haskett said Coca-Cola may have its sights set on Dunkin' for a potential deal. On Friday, we told you Coca-Cola inked a $5 billion deal to buy a British coffee chain. Shares of Dunkin' Brands rose 4% to 76.06. After the bell, enterprise software company Coupa Software said that a rise in subscription sales helped overall revenue grow. The company also turned a profit. In addition, Coupa said that it landed a deal with a workforce management firm to expand its services. Shares were initially higher after hours, and they also ended the regular session up a fraction to $72 even. Also after the bell, the cloud software company Workday raised its full-year outlook for subscription revenue, but saw its quarterly profit come up short. Shares initially fell after hours, but they finished the regular day up 1% to 156.69, and they hit a 52-week high. Our market guest tonight is bullish on the market and one of the first who is predicting double-digit gains for stocks next year. Joining us is Jonathan Golub. He is the chief U.S. equity strategist at Credit Suisse. Good to see you, Jonathan.
Good to be here.
Welcome. So what is going to drive this market higher? We've seen records. Earnings are good, certainly. But there are those who are saying it's getting a little frothy out there. Why do you think we have considerably higher to go?
You know, I think there's a number of stories here, but the most important one is that not only is the economy strong, but the likelihood that this business cycle is going to continue is really the most important thing. And by and large, if you don't have a recession over the next 12 to 18 months, you find that the stock market tends to move meaningfully higher. And that really is the key. On top of that, you have an economy which is in really solid shape, and corporate profits are terrific, with U.S. companies just delivering really good profit growth.
So let's talk about your targets. They're being called bold and bullish, and that certainly is appropriate. You see 3350 on the S&P 500, the broader-based index. That's about 15% from current levels.
Right. Yeah, and it's about 1% a month, which is the way I like to think about it. Obviously, there's volatility on that, and that's more or less in line with the trend that we've seen the last several years. So what I'm really saying here, and that's really why I wanted to put this forecast out for 2019 when I did, is that the trend that we've seen, it's likely to continue, and that I want people to basically move their focus not on what's going to happen this month or the next, but what's going to happen on the next 1 year to 18 months, and that's a pretty positive view.
Yeah. You do say that the next 16 months might be a little tricky in some pockets. How so? What are the risks to the forecast?
Right. Well, I think that's key. And there's this phrase that people on Wall Street like to use, that the markets climb a wall of worry, that it needs something to fret about in order to propel it forward. So what do we have? The Federal Reserve is tightening interest rates. That's something that has people concerned. You have inflation beginning to pick up, which is very typical late in the cycle, and we're in the 9th year of the business cycle. So that has people concerned. Midterm elections, and we don't know what that's going to look at. And then you have the issue of trade disputes. The real question is, are any of these going to derail the successful economy that we have right now? And I think the answer is no.
On that note, Jonathan Golub, thank you so much for joining us.
Pleasure.
Jonathan is with Credit Suisse. Coming up, college athletes have their day in court, and it's all about the money. Here's a look at what to watch for tomorrow. New data for the month of August will tell us whether the trade gap continued to widen from the previous month. And speaking of trade, we reported earlier that Canada and the U.S. will resume their trade talks. And executives from Facebook and Twitter will head to Capitol Hill to testify before committees on the misuse of their services by foreign operations. That is what to watch for on Wednesday. Investors put nearly $1 billion into Fidelity Investments' two zero-fee index funds during their first month in operation. Experts call the number impressive. As we reported, the zero-cost funds were the latest salvo in the ongoing price war among asset managers. Vanguard, BlackRock, and Charles Schwab have all been cutting fees on investments that attract mostly retail investors. Pizza Hut is the new official pizza of the NFL. That agreement was sealed months ago after the NFL and rival Papa John's ended their relationship. The president of the Pizza Hut says the deal is a perfect fit and is hopeful it will elevate the brand's status.
We have big expectations of the NFL partnership, but primarily we want to elevate the fan experience and get customers really, really excited about bringing the NFL and Pizza Hut together.
For Pizza Hut, football season is a strong time for sales. The company hopes its new relationship with the NFL will make those sales even stronger. And speaking of sports, college sports is a multi-billion-dollar business, as you probably know. And today, college athletes are challenging the industry with a lawsuit questioning the NCAA's power to limit their compensation. Eric Chemi is covering this story for us. Good to see you, Eric.
Good to see you, Sue.
So some quick background on why they brought the lawsuit. What is this about?
So this has been going on for years. It's actually two different college athletes that individually sued the NCAA. It's been joined up. It's a broader class action lawsuit. Today was the first day of the real trial. And the idea is that The students are saying the NCAA limits the scholarships is the only way that we can get paid. So every school is paying you the same amount. So they're saying that's kind of like an antitrust monopoly, cartel, whatever word you want to call it.
Regardless of the specific athlete's talent.
Right, like we should be able to get more than this broad limit that every school hits the limit and then they can't give you anything else.
So they want a so-called open market.
Exactly.
How would that work? What does that actually mean?
So one version is every school could pay you whatever they want to pay you, or let's say every conference could agree. These 10 schools in the Big Ten, these 10 schools in the Pac-10, whatever conference it is, I know it's not 10 anymore, but whatever those schools, they could all agree, in our conference, you could get lifetime medical benefits. You could get graduate school tuition. You could get straight cash. You can get whatever you want, as long as all the schools agree in those conferences, as opposed to right now, which is, nope, that's it.
That's it. Well, that obviously is the NCAA's stance. Do you see any softening in that? Obviously, they're going to court about it.
The NCAA's stance is, look, you're not employees, you're student athletes. This is an amateur thing. These are colleges. These are not companies. And that it's pro-competitive to keep it this way. It would actually be anti-competitive to make it a free market in this case because it would disrupt the current process.
All right, so I'll take the other side of that, being a football buff, both college and pro.
What school?
Notre Dame.
Okay.
There you go.
Independent, no conference.
That's right.
Yeah.
So take a look at coaches' salaries, regardless of which team you're talking about. The enormous amount of money that comes in from college football. I mean, some would say that the athletes basically bring in all of those people, bring in all that money to the colleges.
Right, and so some argument is that, look, the best athletes, they go to the best schools anyway. They go to the Notre Dames because they've got the big coach salaries, the big stadium financing, the great weight rooms, the great facilities. They've got all the money.
The TV games, yeah.
They've got all the money anyway, so they're going regardless of getting paid, so that even if you paid them, the best schools would get the best students anyway. So you could make either argument that you don't need to pay them because they're coming, but you should pay them because everyone else is getting paid anyway.
All right, Eric, it's not over yet.
No way.
Thanks so much, Eric Chemi. And that will do it for us tonight. I'm Sue Herrera. Thanks for joining us. Have a great evening. See you tomorrow.